Welcome to Saxo Bank's morning call on Friday, the 12th of April. It looks like to be a quite quiet Friday here, and we're heading into the Easter holiday period. But on another note, we are starting the US earnings season. We have had a few European earnings coming out this week, but nothing really major. And today it starts in the US with Wells Fargo and JPMorgan Chase, the two financial giants out of the US. We know already from SocGen that said earlier this week that they are laying off 1,600 employees, that they had the worst trading quarter in almost 10 years. And M&A and IPO activity has also been in low gear. So in general, financials are not doing very well. There's pressure on the profitability. If you look at this slide I've put in here, if I wanted to broaden it a little bit out, in terms of the earnings season, I have said in my recent presentation, I was just in Prague meeting some of our clients, and in my presentation there, I highlighted this chart here. It's looking at the technology stocks in the S&P 500. So the green line is the total return. As you can see here, technology stocks are now back into all-time highs in the US, but the blue line is earnings estimates on the next 12 months from sell-side analysts. And what this tells me is that the share price is discounting a very positive outlook going into the earnings season, and I think the earnings season presents the biggest downside risk to US equities right now. We have an S&P 500 that is still banging towards that 2,900 ceiling. As you can see here on this chart, we have now been fighting that level for almost a week now, and we don't seem to be able to go through that level yet. We're still at least around 2% from the peaks. I think the earnings season presents obviously either an opportunity or sort of the catalyst for a downside move, but I'm leaning towards that we could see a sort of a downward move in the S&P 500. I think the momentum is sort of coming out of US equities, also to some degree European equities. Momentum also seems to be fading a little bit in China. So watch those earnings. We'll be much wiser next week. That is when earnings are really kicking into gear. So we only have JPMorgan Chase and Wells Fargo to start the earnings season today. Then we've got the extension of the, I almost want to call it the Brexit circus. The EU chose to extend the Brexit deadline to October 31st, and that means that we will have this conundrum, this vacuum. We're going back and forth, trying to see where things are heading. And if you look at this chart here, you can see the pound is weakening against the euro once again, and I see this as very negative for UK. Obviously, it's good to not have a hard Brexit. It could be catastrophic, but sentiment is still worsening in the UK economy. The equity market is not particularly flying either, and real estate markets are still under pressure, in particular in London. I think the extension here will just add to the weakness in the UK economy. So not very uplifting, to say the least. And then it's IPOs. We've had the Lyft IPO, which is the main competitor to Uber. We have Pinterest that IPO'd yesterday, and now we also have Uber that have now released their prospectus, their filings, and interestingly enough, their headline numbers, the gross bookings as it's called, if you look here at the chart, it's been flattening out now for a couple of quarters. In the upper right hand corner here, and net income, which is the red bars, are actually accelerating to the downside. And Uber in their presentation is presenting to investors that it's more about the platform, that investors should look beyond the losses that are currently accelerating in the business. I don't think this, for me, it doesn't smell very well. And if you look at the share price here in the lower left hand corner, it's Lyft. We're trading at 61, way down from the IPO level and way down from the early prints in the secondary market, which is the peak at the beginning of the chart. I think this message from Uber on profitability and the slowdown in growth is not good news for Lyft. So watch out for Lyft if you have any exposure to that stock when trading opens later today in New York. In general, I have this sense that a lot of these IPOs are coming now. They sense that there's this window of opportunity now that equities bounce back. I think a lot of the IPOs were put on hold back in December. A lot of nervousness about whether the window had been closed, and it has reopened, and I think that's the reason why a lot of these IPOs are coming to the market, but I don't see a lot of strength in them. And to end this morning call, we have to go through the calendar. It's very weak, as I said today. We have at 0900 GMT, we have the Euro area industrial production for February, not a particular exciting number. At 1400, we have the Michigan sentiment, which are preliminary numbers for April. Always one of the first numbers to give a guidance on where sentiment is in the US. And then next week, as you can see here, the macro is really kicking into gear. We have a lot of interesting numbers. On Tuesday, we have the German April ZW survey, which is always a potential mover for markets, at least here in Europe. We also have a lot of CPI numbers, housing starts in the US, etc. Very exciting week. And then, as I've put over here on the longer term event risk, we have extended now the Brexit deadline to October 31st. And then we are approaching this FOMC meeting on May 1st, which is also will begin to have an impact on the market in a very shortly. And I have to say, as a final remark, that we have decided, because of the Easter holiday period, that there will be no morning call for the next week. So we'll be back in the following week after that. So have a happy Easter holiday out there, and thank you for listening and viewing to our morning call. See you again in a week's time. Thank you.